Hello traders, welcome to a new video on sentiment. Today's video is going to be looking at profitable and unprofitable longs and shorts and how that impacts price. So the site that we're going to be talking about today is bitgur.com, and I have attached a link in the description below. And the basics of what we're looking at is we want to see when bull income is above like this, you can read these numbers, that means that longs are in profit. When it's below, it has a minus, that means that the bulls are out of profit. So that traders who are long are in losing positions, mostly. And we can see here with shorts as well. These are when shorts are in profit, and these are when shorts are not in profit. And this data all comes from Bitfinex margin data. So we're going to be going into the why. So why is it that these traders do what they do? And also we're going to be going into not only predicting what will happen to price, but predicting what these traders are going to do and using that to predict what's going to happen to price. So what we're going to be doing is looking at how to exploit the psychology of retail traders and do what many of them are going to do before they do it. So this is the first 4 questions that I want to talk about before we go into talking all about sentiment, this and that, and some strategy. So each of these has a yes or no answer. And if you get all 4 right, then you're doing well on the sentiment front. So I'm going to give you guys 3 seconds to just answer these questions. Okay, so I know that this can seem subjective. Some of these can seem a little bit subjective, but the data that we have here and the data that I have on different kinds of cryptocurrencies and just from looking at this, it tends to be that these patterns are what happen the most frequently. Well, why? So we have a market, and imagine in this market we have 1 long and we have 1 short. Price goes up 10%. How does the long feel? What's his sentiment? Well, his sentiment is price is up 10%. I'm worried. Price might go down and I might not make as much money. I might as well just sell now. I'm already 10% in profit. You know, I can always just buy back at a lower price. I might as well just cash out now and play it safe. Now, what's the short thinking in their sentiment? I'm down 10%. I shorted. I do not want to take a loss of 10%. I don't want to lose that much in my account. I'm going to wait until price goes lower. And then when it goes to break even, I'm going to get out and I'm going to lose nothing. Price goes up to 15%. So what happens? Well, the short's going to say to himself, well, I might as well add more. I might as well sell more. And then the short begins to add more to their position and sells more and more until they add 100% to their position. Same scenario for just the reverse. Imagine that price goes down. We have 1 long and 1 short. The long is down 10% now, and the short is up 10%. What is the long going to do when he's trading at a loss? Are they going to be eager to exit their position? Probably not. Who wants to take a 10% loss? I mean, you should, you know, in that scenario, but, you know, you'd have to look at the data first. But we're talking about the retail trader mindset and the margin traders that we're tracking with the data and how we can exploit these traders. So if we know that many longs are likely not going to exit, or if anything, they're going to add to their positions to try to get a better average price when price has gone down. And when price has gone down, we know many shorts are now in profit and are likely going to be eager to take their profit. What does this mean? Shorts taking profit is buying. Longs adding to their position is buying. So if we have many shorts in profit and many longs at a loss, what's going to happen? Well, that's going to be a large amount of buying. So what do we want to do? Well, we want to look for a spike of shorts in profit. We want to look for a spike in longs who are not in profit. And then we want to buy before these traders buy. So that's really, in essence, the end point of this strategy. This is just the beginning point of beginning to look at the psychology of these traders. Because what's going through a trader's mind, a retail trader? They don't want to take a loss. I mean, we all don't like taking losses. No one does. When an altcoin's down 30% that you bought, are you going to sell? Probably not. And a lot of traders, when given the opportunity, especially if you trade into a coin that was down 30%, goes up, and now you're 2% up, many traders are going to be ecstatic about taking that 2% barely profit. So what we see in the data is the moment when a lot of traders just slightly go into profit, that's actually when a lot of the traders actually exit their positions. And we can use this against them. Another one is, if in a losing position, add on to the current position if possible. So if price goes up and someone shorted with half their capital, price goes up another 5%, let's say, they short with the other half of their capital, and then they get a better average price for their short. So what this is going to do is just what I described before. If many longs are in profit and many shorts are adding, that's going to be a large amount of selling. And for 4 and 5, if others are buying, I should as well. This is a really common retail trader mindset that, all of these 6 are something you probably do not want to do. You want to do the opposite of these 6. I'm just suggesting what retail traders typically do. So imagine you're looking at the order book of an altcoin you wanted to buy. The price is up 5%, spiking on high volatility. The order book shows many limit buy orders popping up, not many limit sell orders that are visible. And you see on the order history that there's a large amount of market buying happening. Everyone seems to be buying, and the price just can't stop going higher. So what's that retail trader going to do? They're probably going to buy at the very top. At the very top, where a large limit sell order rests, ready to take in their market order, they buy, and then price goes right down. How about selling? Well, imagine that a trader is in profit and the price begins to go down against them. What are a lot of them going to do? A lot of them are going to want to sell. And if they see a lot of other traders selling, if they see a lot of other margin traders shorting, that may entice the new, more noob trader to short as well. And point 6, this is just more of the retail trader mindset of how do they make their decisions? I will decide whether to buy or sell depending on how I feel at the moment. This is how so many retail traders are going to be deciding, and we can really, again, use this against them as well. So now I want to talk about how does the market operate? Well, we know that the market moves toward liquidity. What this means is if we have many stop losses below price and not many stop losses above price, the minute that one of those stop losses below price gets tapped into, it's going to hit another stop loss and hit another stop loss, and the market is going to move toward that liquidity. If traders continue to sell, that will turn into a downtrend and price will go down. If it's just stop losses and there aren't many genuine sellers, then it's going to be a stop loss hunt and price is going to go higher. So that's how the market moves toward liquidity. Now, the market doesn't just move toward liquidity in one direction, it also moves away from large limit orders or large clusters of limit orders. This is not spoofing, we're not talking about bid or offer spoofing, but what we're looking at here is when there are many genuine bids, many people want to buy. What happens? Well, when a lot of people want to buy, that's a large amount of demand. And when there's a large amount of demand and a lot of people want to buy something, that something is going to get harder to buy and the price is going to rise. And the price is going to continue to rise until demand equals supply, until enough buyers can find enough sellers. Same with the opposite. If a lot of people want to sell something, supply is high. And if supply is high, price is going to continue to trade lower until we can find an equal amount of buyers. So this is really one way to think about the limit order book and how price moves away from these heavy limit orders and also large order clusters. The final note is the minority is going to be profiting off of the majority losing money. This is just a fact of many markets, that it's typically going to be the retail traders that lose the bulk of the money and the institutions and high frequency traders that take advantage of retail traders to make a large amount of money. With that, let's go into Bitgur and trading sentiment. So this is a little cheat sheet that I made for one to look at if you want to use it or not. Basically, just the way to use it is if you see a point in time where, let's say, there are unprofitable longs and there are profitable shorts. So just, an example for that, unprofitable longs and profitable shorts. Hey, here, right there, we have unprofitable longs and we have profitable shorts. What does the thing say? Well, typically when we have unprofitable longs and profitable shorts, that's going to lead to an uptrend. Why? Profitable shorts are going to want to cover. They're going to want to buy. Price is going to go up. What are unprofitable longs going to want to do? They probably don't want to sell at a loss unless they get liquidated and are forced to. But they probably don't want to sell at a loss, and they probably want to add to their position to get a better average position. Buy. So what's going to happen with that? Well, when a lot of them do this, price is going to rise. As you can see, it does here. And you can use the rest of these two that you can look at as well. All right, let's take a look at our first bull and bear income chart. We have EOS USD margin trading sentiment, and you can see this is price. This is the bull income, so profitable longs, unprofitable longs, and the bear income, profitable shorts and unprofitable shorts. Now, one note on this that I do have to talk about. This is only showing data for traders initiating a margin position. This is not showing the traders closing. So the bull and bear income does not take into account traders who close their positions. It only takes into account traders who open them. We can still use this data, but do make sure to check when a lot of traders are closing their positions because that's not going to be reflected in this data here. All right, let's apply what we learned from the cheat sheet here to this graph. Price was moving up on high volatility on EOS. We had a retracement here, and then we had that. What happened? We had bull income of about $1 million. As you can see here, $1 million worth of bull income. The longs are feeling good. They're doing really well. A lot of them are buying here. The shorts are not doing well. They're here. So what's likely going to happen here? Well, the longs are probably going to begin to take profit and sell, and the shorts are going to likely add to their short positions or just do nothing. So what happens? Price went down. Here we have another example that I didn't indicate with an arrow. Burst some profitable shorts right there. We have a lot of profitable shorts coming in. Not many profitable longs. So the profitable shorts may have covered, which pushes price higher, and the unprofitable longs may have added to their long positions, which is also buying, which pushes price higher. So from that point, price went higher, as you can see here. Now we get to this point right there in price. We have a burst in profitable longs on EOS right there, and as you can see lower right down there, we can see we have unprofitable shorts. What happened? Price went down, and this pattern just continues over and over again. Here, bursts in profitable longs. We went from not many to about almost $1.5 million worth of profitable longs held on EOS USD on Bitfinex. And here was right there, as you can see. And we still had unprofitable shorts. So price went down from there to there. Again, one last time. We went from here all the way up to here. And at that point in time, hey, we have more profitable longs. We have unprofitable shorts, a lot of unprofitable shorts here. Price is just going to keep going higher, right? No. Price went down. And all these profitable longs went way out of profit. Now, there's one other interesting thing that I do want to note here. Notice this price pattern, and then look at this. You can see that these longs were profitable, mostly profitable, and then the moment that they're not as profitable, or the moment that they're actually not profitable here, that's at the very low here. And then price began to move up, as you can see. So that's just another thing to think about here. The market, basically the market moved down until the longs were out of profit, until it had shaken out the longs. Even though I know this doesn't show closed data, but until the longs stopped buying. And then you can see that right there, price went up. Where do they buy? Right there. You can see that curve. They bought right there. And price went down. Final note that I want to put on here is, look what just happened on EOS USD. We had profitable longs. Finally, after a long time, longs came into profit. How about the shorts? They're still unprofitable. So with unprofitable shorts and profitable longs, what do we think is going to happen to EOS? Well, price went down, and let's go take a look at EOS now. Yep. And price went down further, as you can see. So price went down about 8% high to low, and this may have occurred just because when we look, when we look here, we had profitable longs who likely sold off, and we had unprofitable shorts who may have added to their short or just not done anything, so price went down. All right, let's take a look at the king of all cryptocurrencies, Bitcoin. Now, Bitcoin had a bit of a different pattern, whereas EOS had these quick bursts of profit, of profitable longs or of profitable shorts there and there. Bitcoin's a bit different. We had a steady increase of profitable longs and a steady decrease of unprofitable shorts here as price went up. This would have offered a good time to short, just somewhere around this range, and then profit off that. And we had so many profitable longs, we actually had about $5 million worth of profitable longs held in Bitcoin here, and price just tanked. We had a lot of unprofitable shorts here, so all of these profitable longs began to take profit, fueling that. Now what happens here? Well, same pattern that we saw in EOS. Hey, we have profitable shorts. These shorts who had shorted here or who had just initiated a short position right here, they're happy and the longs are out of profit right there. What happens? Price goes up. Price goes up until those shorts are out of profit and the longs are way in profit. Then price goes down. Longs, hey, longs are in profit now. Great. Shorts are now out of profit, so price goes up because those longs, those shorts who were in profit began to buy, and the longs that were trading at a loss began to buy as well. As you can clearly see here, they did buy. That's why that number increased. And they bought right there, and that's where bull income spiked, and bear income fell apart, fell down to there, so price went from there to there. And you just keep seeing these patterns over and over again. You know, price went down to here, where we had a long point of many profitable longs and a long point of many unprofitable shorts here. Price went down. Too many profitable longs here. We couldn't find enough buyers to push price higher, so price went down toward liquidity. And what we see here is we got to a point where the longs were finally unprofitable, and the shorts were finally profitable. So what happened here? Market corrected, went right back up. And this is just the pattern that's just going to continue again and again, trying to ensure that both the longs and the shorts are going to be losing as much money as possible. I mean, it's kind of sinister to look at, but looking at the profits and lack of profits from these retail traders is a really good way to trade against them and to try to predict what they're going to do what they're going to do way before they do. Example of that, here, we have profitable shorts, we have unprofitable longs. We buy here because we expect that these guys are going to buy and that these guys are going to add. We buy here and we make that. Same here. We have a period of many profitable longs here, many unprofitable shorts here. What do we want to do in this price range? We short and we make that. And this is the kind of way that we can be a contrarian trader by not just looking at positions, by not just looking at bull and bear positions or long or short, but by looking at the sentimentality, looking at the emotions of these traders, how they're going to react when they're in profit or when they're not. Now, a few extra notes that I do want to put here when you do take a look at this data. So the data shown on the chart only includes the opening margin positions, which I have said. Second note is pay attention to the amount of volume shown in the bull and bear income, because sometimes if there's very little volume, then we can't really read the sentiment as well. But on the examples such as Bitcoin and EOS, we had plenty of sentiment volume, so we could use it. And then this one as well. Of course, don't bet everything on one indicator. That's probably not a good idea. Now, the final note that I do want to make when you are reading your profit and unprofit chart is the unfortunate part is this determines profitability on the opening within the range. Let me just explain what that means by making this a little bit more clear. So if we look at the 1 month chart, we can see that all of these longs are trading out of profit. They're not profitable. But if we look at the 3 month and take the same 1 month period back to that point in time, back to 10th of October. Let's go to 3 month. Let's go to 10th of October. That is here. You can notice that this is not the same. This does not look the same. Previously, this was all unprofitable, shorts. Unprofitable longs here. But here it looks like they're more profitable longs. This is because of this scale. This is going to be showing profitability based on the scale of the chart. So if I hit all, it's going to look like that, which is going to look very different. Or if I hit the 1 year, it's actually going to look very different than the 3 month. 1 year is showing all of these guys are out of profit on the longs. The 3 month is showing not the case. This occurs just because of the range. To mitigate this, I would highly recommend do not just check one time frame and then just decide that's it. What I'd recommend is when you're looking at present data to make a decision, you could do this. You could say, okay, on the 3 month, looking at where exactly did long positions initiate and where exactly did short positions initiate. A really easy way to do this is to disable one. I just disabled short and bear. I'm only looking at long and bull income. hey, I see blue is longs and green is price. Okay, we can see a lot of buyers coming in right there. So a lot of buyers coming around that 67 mark, 6,700 mark. Okay, got it. You know, and where are many longs exiting? Many longs exited right here. That's not going to be reflecting the data. Okay, got that as well. And you just look at it that way. And then you disable that, and we enable short positions, and we do the same thing. Look at where the short positions are doing. What I like to do is look at the simplified view of just bull and bear income. But of course, this is a little bit of a simpler view that I'm looking at here. But in the past month, of many positions open of longs and shorts, you could see that overall the longs are trading at a loss in the last month of those who opened. And those shorts who've opened in the last month are trading at a profit. And that's really what this 1 month is showing. So play around with this data, and it will start to make a little bit more sense. Now, another example that I want to go into is Bitcoin Cash. What happened here on the 3 month? Bitcoin Cash spiked on high volatility. We went from 530 something to 640 to 650. Massive spike. Longs were finally in profit here. Let me show that. Longs were finally in profit here, but the shorts were in profit there as well. What does my little handy dandy thing say here? When both sides are in profit, it's typically going to lead to a reversal because the market doesn't like it when both sides are in profit. That is typically not going to happen. But that does happen here, where we see both sides are in profit and then we go down. When did it happen? It happened right when this turned, right when the unprofitable longs, who may have begun to buy, they all bought here. We had profitable longs, and then price went down. Happened again here. What do we see? We see many profitable longs coming in right there after that high volatility spike. Price goes down. And then here's by far the best example, I think, of any chart that I've seen so far. Look what happened to Bitcoin Cash. Bull income in USD of 2.78 million. Shorts, negative 3,295. We have so many unprofitable shorts and so many profitable longs at that point in time. That peak in Bitcoin Cash USD Bitfinex, so many of those longs are going to be selling at a profit, which is still selling. Many of those bears are going to be selling to add to their short positions and try to get a better average. Let's go take a look at what happened to Bitcoin Cash. So this is Bitcoin Cash right now. All the longs were profitable here. All the shorts were out of money. Bitcoin Cash fell like that. So be very careful whenever you're making a decision, whenever you see something like this happening. This is not a good sign. When Bitcoin Cash was spiking high volatility and all of these people were making so much money, yeah, they had made money, past tense, but we do not want to buy here because buying here, would have led to the 18% loss. I just find that these charts are super helpful in looking when to buy, when not to buy, what kind of markets do I want to buy, what kind of markets do I not want to buy. You can look at many different kinds of sentiment. Bitcoin Cash, Ethereum. You can look at EOS. You can look at Bitcoin. You could look at plenty of others. Like this is Ethereum market sentiment, which is important as well. And if I just do my handy dandy, disable that, disable the bull, and enable the bear, boop, boop, boop. Yeah, we can see it right here. You can see we already have a lot of profitable shorts. So let's just focus on the longs because this looks a little bit more interesting. What happens here? Price is going up from a low of 175, goes up, goes up. Hey, all these longs are in profit. What happens at that very point in time? Price goes down and since then has not gone up back to this point. It hasn't. Why? Because there were many profitable longs here. And when there are many profitable longs here and then price goes down, two things may have happened. One, a lot of them sell and they sell price lower. Or two, these guys who were in profit, were unprofitable here and now are unprofitable here, their break-even rate is about 240. So if price goes up to 240, a lot of those guys are going to want to sell, which is going to push price lower again, and this level is going to act as resistance because so many of these guys want to sell. So that's what's preventing price from going back up to that 240 level currently, as you can see. And that's on the 3-month view. If we zoom in the 1-month view, we might get something different. Not really, just the same kind of thing. A lot of profitable shorts here, so price is kind of pushing its way up there. All right, so that's going to just about do it. I'm going to attach the link for Bitgur, and I hope that this was helpful in looking at how to use not just regular sentiment, but profitable and unprofitable trader sentiment, because I've found that this is, I think, top 3 or if not even number 1 market sentiment resource I've ever found. So hopefully it is helpful for you. Take a look at a few different coins, a few different time frames, and see what you can do with it. With that, happy trading.